Good morning, good afternoon, Thursday, February 19th. Markets this morning are trading relatively well. See the cost be up 3.09%. That's quite a rally. Yeah, markets are in a very good mood. As you can see there, the Mag 7 performed well, mostly technology led and also energy. Those two. It's very unusual that both of them do rally strongly on the same day. Given energy does tend to kind of have this upward pressure on yields, and it's not something that technology stocks like. But yeah, pretty good participation across the board in US equities. Brent higher, NatGas dropping even further lower. I'm having some ideas there I'll talk about a little bit. Copper, gold, silver, all up, precious metals. As you would expect with some of the risks that are kind of brewing in the background, only commodities seem to be sensitive to those risks, whereas equities do not. So I think that's a good talking point for today. Aussie, strong data, strongest on the day. Yen, the weakest on the day, though both of them are sort of paring back a little bit from their moves. A little bit of a risk on complexion in FX with Aussie, New Zealand, both higher. We had some Aussie employment data, which was quite strong. Full-time employment change was 50.5K, above the 10K expected. And then we can see the part-time employment was weak. And, expectations were expecting something more balanced, but unemployment rate also ticked down as well. And you can also see the green bars in the all the prior month figures have got revised up. So, yeah, good data all around. Will it do much for the RBA? In my opinion, I don't think the employment data matters as much. I think their key focus is on services inflation and wages. For the RBA, rather than this employment number, services inflation is what they really care about because they closely link to labor cost pressures. So that's the key thing for them, in my opinion, inflation. So we have claims today. EU consumer confidence, just claims today, I would say, is the main one. And then we have the round of flash PMIs tomorrow from all the major economies. UK retail sales, Canadian retail sales tomorrow, the US GDP deflator. And then we have the Supreme Court case tomorrow. I don't think they're going to come out with a decision, but something to look out for. I am, leaning on the bear side. I am bearish on risk assets. At this point, we've had some very hot rallies. The vol regime is not conducive to extended rallies. I expect, rallies to be met with some supply, but I also expect sell-offs to, be prone to mean reversion back higher because of this negative gamma regime. Negative gamma regime means that there's like a lot of hedges on for the downside, and when you get some sharp moves, some of them get monetized. So you get this very whippy price action. But overall, expecting some choppy, tactically bearish type of environment. Although I am mega bullish on the medium term across everything. I'm hoping that from the ideal scenario would be that the bearish kind of phase would give us some good opportunities to get long the others on, once the smoke, the risk sort of starts to clear. So we'll be looking at some charts today and thinking about whether the market is getting too complacent. Are we too early? Are we kind of overestimating the geopol risk against a very strong, solid fundamental background? Not just in the U.S., but Europe is relative. It's improving. Incrementally. Asia as well. So yeah, it's a tough balance. But I do expect the market to kind of be on edge a little bit more than than price action is suggesting. So technicals generally favor long dollars, risk off leaning, some assets, some FX, things like that. Are just looking a little bit complacent, and something like the Aussie. RSIs are way up there. It's had a nice long smooth trend. It's a bit of a crowded trade, so I think tactically, short Aussie would be quite appealing, even though they have the strongest fundamentals in G10 at the moment. Moving on to some news flow. Yeah, there's a lot of speculation about war, and it doesn't seem very likely that Iran's going to come to a deal or meet the demands of Trump. Trump seems fairly rigid in what he wants. Question is whether he's going to taco a little bit and find some middle ground. I'm not so sure about that. One of the key points that's not just on Israel's mind, but also other countries in the region, they're kind of opposed to Iran having all these missiles and things like that. So I think that's a major point, which doesn't seem likely to get resolved between the two. And then they're scrambling behind, as we are seeing. I put a link in the news channel of this Reuters article. It's pretty neat. There's quite a few satellite images that they go through. But yeah, it just shows that they've poured concrete over a certain area and then just covered it up with soil, which is kind of funny in a way that we're seeing all these images. Iran issues notice over planned rocket launches in Thursday drills. Busy with their drills. The Ukraine talks, the second day of negotiations rather, didn't have any breakthrough. Zelensky doesn't see a breakthrough still. I'm not sure I do. I just think it's a lot of, just a little bit of posturing by both sides. And Zelensky, you think about it, we talked about this before, I don't think he wants to give up any land. And Russia, they think they're entitled to that land for some historical reason or whatever. Yeah, don't know. But oil, definitely feeling the effects of both types of risks and sort of tensions being high, and also precious metals, equities, not so much. This is the idea with NatGas that I'm starting to think about. And should anything hit off, I think NatGas could get dragged higher in this. So I'm considering a small long position, risking about 30 cents, looking for maybe $1 or $2 type of move, maybe more. And it's really all about this whole area here in Qatar being a major supplier of LNG, and they all ship it out here. There's other nat gas fields around the area, but which they can route through other sort of pipelines and things like that. But 1/5 of nat gas supply comes through this little strait here. So just an idea. Wall Street, yeah, clearly sentiments is pretty good. We'll be having a look at a few technical type of stuff, try to gauge how strong it is, and is it getting stronger, and things like that. Retail, big participants in this rebound in technology stocks, particularly in software. Net notional on our platform has reached levels we have never observed before, like never before. Seems like such a buzzword these days. Trump and Iran, I think, said something about doing something like never seen before. Anyhow, the magnitude, persistence, and breadth of buying activity have materially exceeded prior peaks, and we can see that little big pop there. So retail, army going strong, and retail, they have to be kind of respected. They do help to drive a lot of the market sentiment. It's not just your institutional people. So yeah, that is saying something. So we'll have to keep an eye out on that software sector, I suppose, which does look like it's largely done. And everyone feels that we're due for a massive rally. You check on X, you have the people who are focused on the geopolitical risk, and then you have the people who are just clearly focused on the equity markets, and they're all very, very positive. And, for example, I had this little discussion yesterday about how people are drawing comparisons to the price action that we saw in 2021, which, analogs you have to take with a pinch of salt, like you do with seasonality and things like that. There's You have to consider conditions, the narratives, and kind of compare and contrast and see whether if those are also similar, then I would give those types of analogs more credit. But I'm not sure about that being the case this time around. Don't know. Don't know what's going to happen over the next few months and whether you have long end yields coming down. But I do like Zach's thinking from our discussion about NVIDIA and some of the more infrastructure type of people now starting to carry the torch forward for software industry now that a lot of them have reset it back down. Fund managers, very, very overweight equities, commodities, biggest allocation since January 2022. ISM manufacturing PMIs historically has led this type of allocation. Yeah. I don't know. I don't know what to say about that. I mean, it's there's obviously some correlation between both, right? If manufacturing sentiment's coming back, then you're surely going to be positioned in those industries. Commodities ripping tends to be supported by strong enough activity, of course. So I prefer to take this as a little bit more of a contrarian signal in some ways than I would about something about ISM. But I do agree that manufacturing is going to be strong, as we're seeing in the data. We had durable goods orders, we had industrial production, and they were pretty good, all pointing in the right direction. Housing starts rise to 5-month high and broad increase, and we saw Treasury sell off a little bit, yields higher. And also, I was just kind of off the desk and just kind of scrolling through my phone and saw this video. If you've seen this guy who does the videos of interviewing billionaires. Tax hack.
Are you sure?
Yeah, I need it.
All right, I started a new company.
Okay.
It's a media company for billboards.
Okay.
So billboards qualify for what's called a land improvement. So they're not actually real estate. So they qualify for 100% bonus depreciation in the year that you buy them. So we're in the process right now of closing a huge deal.
This is game right here.
Yeah,
You know that, right?
And they're you basically get 100% write-off, and you get massive cash flow, and they're long-term holds.
100% write-off. And that's exactly what the basically the latest sort of amendments to Trump's old tax cut act, Tax Cut and Jobs Act or something like that he did in his first term, and its extension to that. But now for any investments that you make, you get 100% tax write-off in your first year. Just from what I knew of it, I just thought it was more to do with factories and equipment and heavy equipment type of investments, all relating to kind of data center type of build-outs. But there you go. Even business people like him are finding ways to take advantage of that. So, that's quite a tailwind to the economy, more than just data centers, which is already a huge tailwind for GDP. Takaichi, I'm very impressed by Takaichi. I must say, calling that snap election at risk of losing it. Instead, it turned out to be a huge gamble. She actually rallied support and respect for doing that, and now probably going to get that big budget passed through with the food relief by reducing food tax and things like that. And what does that mean? It probably means that yen is not going to find too much relief because of a bit of debt concerns just continuing to be there. And plus, things like dollar yen is more to do with the US side more than it is the yen side. Some other news: Lagarde, apparently she's going to end her term sooner. UK inflation falls to 3%, cementing that rate cutting expectation at the next meeting. Inner London house prices dropped the most. Looks good. I still think UK, the pound, is still underpricing the risk of 3 cuts this year as opposed to just 2, including the next one. So pound, I still have a fairly strong bias for downside in the pound. just tricky to kind of pair it with the right thing and express it correctly. I would say the dollar, there's just so many reasons to be mega bullish on the US economy, as you can see with that video just now, and the dollar as well. Everyone's short, everyone's hedged. If some confidence returns back towards the dollar, it could take a lot of that weight off the downward weight on the dollar. So pound dollar, probably the best. Pound yen downside, obviously, probably doesn't make sense in a world where we're seeing yields kind of creep upwards to reflect better growth and inflation expectations. So and maybe later pound odd. So probably the ideal scenario is that we get a bit of risk off. Aussie, it could really shake out a heck of a lot of longs. And if so, then something like pound odd or euro odd, it's just going to spike higher. We're going to see the spike rebound higher, and hopefully that's a good time to enter short pound odd or something like that, because being long Aussie, we're still being constructive on the longer term in terms of the global economy. It's just that risk. So kind of thinking about that scenario and visualizing it, and that's kind of how I want to be positioned, because I can do some day trading here and there, but in terms of like the bigger ideas, that's kind of what I'm thinking about. And then this little Diego Garcia, first time I've heard of it, chattered that the UK will be entering a lease, and Trump had something to say about it. This land should not be taken away from the UK. If it is allowed to be, it will be a blight on our great ally. So, yeah. And it's right here in the middle of the Indian Ocean. Looks like one of those colonial type of pit stops from the colonial era. And, you can see why the U.S. probably has an interest in it, because strategically, you can park stuff there, right? Kind of like Midway Island to all this area. So, yeah, interesting little thing there. U.S. equity markets looking pretty strong, looking pretty damn good. Very, very broad participation across the board. Slight wicks yesterday formed around the growth and momentum and the large cap, but generally looking quite decent. Can it continue rallying further? I have my doubts. But generally looking okay. Just looks more like consolidation for now, doesn't it, than anything. And then for FX, it's interesting that now that we're seeing a rebound in yields, the dollar and yields have started to come back in line with each other. We saw yields plummet, and then dollars sort of kind of holding up a little bit, just kind of wondering what the heck was going on, I suppose. And now it's kind of moving in line. Maybe the most obvious is the SEC, which not many of you trade, I believe. So dollar SEC long would probably be an idea there. Yesterday's price action, we've held this VWAP line quite well, and that was this was a significant level, whether we close above or below, and we didn't close below it, which is something that I was hoping to see to kind of put the bias to the downside. And then we have some other big levels here. 6860, I think, is a key pivot level to the downside. We kind of go out a little bit more, get this off. 6860, which is basically this whole area here. We rejected that, and this here. So that area for me, I think is also the next sort of big level down. On the upside, we had the 20 DMA on the ES and things like that, and the 61.8, and we held there. So it's for technically, to me, I think how it does today, which side the bias goes, is going to kind of dictate at least some of my decisions with regards to my shorts. So I've been picking off some high ones yesterday off this cluster here, and yeah, it's still holding up okay. Yeah, we'll see how that goes. In terms of the Aussie dollar, this area I've been flagging as being quite decent. If you're looking at the higher time frame, I think this 0.7 handle, which is the lower dashed line here, and the 0.71 the upper one is the key area to look for that reversal price action, right? Because it's been a major, major pivot here. And it's, we've had to negotiate this whole area through this period when it got lower, and then when it went back above, and then, so you can see it's a very, very important price area. And if we go down into the lower time frames, we're seeing a little bit of that. If we continue to make lower lows, then that market structure would continue to look okay. But nonetheless, I do think it's showing some potential, and it's been a very, very strong performer. And if we do get that risk off, I expect quite a bit of violence in this. In terms of downside targets, yeah, the breakout level 0.67 probably isn't such a bad target. So yeah, I mean, let's just say you were even going for this sort of area here, which would be around here with that stop and your entry around here. It's a fairly decent risk reward. So Aussie dollar is the one I kind of like. If you are interested in this, dollar SEK is the other one. It's a highly cyclical currency, does very, very well. We look at the Stockholm Equities Index to gauge risk sentiment because they're a huge part of the European supply chain, and same with their currency as well. So dollar SEK, and as we saw in our correlation matrix, you can see here that SEK is negatively correlated to energy prices, right? And also to the VIX, not one of the strongest, but at least it's negatively correlated to the VIX. Good correlation to risk assets. And yeah, but this is the main point. It doesn't like the higher energy prices. It's a bit like Germany as well, and Europe. They don't like higher energy prices. They have a lot of advanced factories, relatively tight margins, and energy prices can be a deal breaker in some of that kind of calculus. So dollar SEK, I think, is another one that's worth a look. Good levels, when you just kind of look at it from loosely speaking. So if you're kind of into that, if this speaks to you, I think dollar SEK is not a bad trade. So that's kind of the other idea that I'm thinking about. That's pretty much the trades I'm looking at. S&P short, dollar SEK long, Aussie dollar short. And I'm still running some dollar yen and dollar Swiss. I'm kind of regretting paring back, booking some profits there. Yeah, happy to run it for now. For risk off, don't fancy GU short. Yes, I do actually. I do. That's another one I do like thematically. Yeah. Yeah, it's a nice move lower. 1.35. Yeah, we expected that. Now can we start to make further progress below? Yeah, I don't see why not. Also another rough trend line here as well. So, measured move, line up the break with the 50 here, this one, and that would target 1.33-ish. Yeah, technically looks good for more losses. Dollar CAD we've been looking at, but that was just a quick trade for me. Yeah, it's still got a good upward bias, dollar CAD, but I'm not sure this is the best way to play it. Play long dollars. Yeah, but with your pound, your cable idea, I think it's a lot better. And plus, it makes a lot of sense, right? Fundamentally, even without that risk off, it makes a lot of sense with the risks of the BOE hiking potentially more than twice. So how do we check that? You go to Sonia SO3 Z2026, and this is your December 2026 contract, which is basically your Bank of England interest rate expectations. So these are all out of 100. So if you minus 100 from that from 100, you get 3.26, and that's what's priced in by December of this year. we're now at 3.75 and 3.26. That's 50 basis points of cuts priced in. So that's how you check out interest rate expectations. And I think the risk is that we, price in a little bit more and we price down to 3. So basically what I've been saying is that, I expect this to trickle lower as time goes on, as the data starts to come in weaker. So yeah, it's not a high conviction view, but I think that's the risk anyway. I think the risk skew is more towards more than 50 basis points than less. So yeah. Nice. Yeah, I got out for I have plenty of other positions on, so it's kind of expressing, but it does make the most sense. So probably I should have maybe rotated some of my yen dollar Swiss position into pound over the Aussie. I just trying to be clever, I guess, too clever with the Aussie. Trying to go after the one that's performing the best and that's going to screw the most people. You had other irons in the fire though, yeah. No, it's a good trade. It's a good trade. Good thematic trade. Makes a lot of sense. Can't argue against this being a very good trade. If it doesn't work out, it's a bad beat.
I was just going to say with CAD right now.
Yeah.
Carney got another conservative to walk the floor, so he almost has majority government, and the market could see that as positive.
He's still 3 seats away.
3 seats away, but so far he's got like 4 odd people to walk the floor. So we'll see. Just say with dollar loonie at a key level too, it might be definitely advantageous to look elsewhere.
So what are you thinking? You think the direction of travel is more CAD positive?
Yeah, I would see. Yeah, potentially. I think the market sees a liberal. I think any majority government, right? But
yeah,
you can get it because right now it's a little deadlocked, and you need a lot of cooperation.
Well, that's an interesting view to take. Personally, I don't really have too much of a view about that. I'm not sure how big of a deal it is, but yeah, I mean, it does kind of fit in with some of the themes that we're talking about. For example, I'm sorry to say this, Agus, with you being Canadian, but the CAD, the loonie, is like the retarded cousin of the dollar.
No,
it gets dragged along with everything. And it's interesting that this is the CAD index. And it's interesting that when you look at the dollar index, we're kind of starting to see a bounce, and CAD just starting to kind of show a little bit of life there too, which means something like Aussie dollar could work out. An odd CAD, remember we looked at this, has that interesting a couple nines there. It's not the most solid ones on the daily, and we have a 9 cell setup on the weekly. RSI is kind of way up there as well, especially for FX. Those are quite extreme readings, right? Being up there. So yeah, maybe odd CAD. New Zealand CAD, if it keeps being disappointing, still, it takes their sweet time into kicking into gear in that recovery. New Zealand CAD might be an idea. What other CAD expressions are there? Pound CAD?
Pound CAD's a good one.
Ooh, it's looking quite nice. Interesting. And then you have a bit of that oil factor in there, right? EuroCAD as well, as we saw. Euro also doesn't like higher energy prices. Who's got the stronger negative correlation? Between the euro and pound, euro has the strongest negative correlation, and then this is basically a euro USD trade. As I keep, I know Jerry always likes to look at these types of crosses with the CAD, and as I always say, there's no good reason to be trading CAD pairs most of the time. You should probably be trading dollar pairs most of the time. So for example, if you want to be short Euro CAD, right, you look at Euro CAD here since end of January, okay, it's come lower and it's done sweet FA, for the last month. And then you look at Euro USD, and since the end of the month, you had some nicer swings. and it's much nicer to trade. So most of the time, unless there's very specific reasons, which there are for sure, but most of the time, you're better off trading the dollar pairs if you're thinking about CAD crosses. But yeah, pound CAD, interesting. I like the themes that's going on there. Some of the points that you raised. Bit of a political sort of divergence going on, right? I mean, the UK, Labour Party looks a mess and just keeps getting worse with time. The longer it doesn't resolve itself. And then CAD, it seems to be incrementally improving. And then CAD has a little bit of that oil thing going on for it. The BOC, even with their weak data, they're pretty much right at the bottom, and they're not going to ease anymore. They're just they're comfortable being around 2.15% or something like that. I don't remember. And then the UK, there's a bit of a risk, a downside risk to that expectation being towards 3 cuts. We're now seeing home prices in inner London kind of collapse, which tells you a lot, I think, in my opinion.
Bank of Canada's, they're holding for the next foreseeable future too, right? So their rate's pretty much locked in.
Yeah, exactly. So good themes. Good themes.
Like that bottom though. Nice bounce there.
Here,
level. Well, 183, I think it was just now.
Yeah. Yeah. Your scalp ideas are, oh man, you're taking me way back to these days where I used to kind of scalp these micro structures. But yeah, not that I don't do them, but I do like to. Yeah, I do like to kind of scalp in the direction of my bigger picture thinking, because then you could get a little bit lucky when things sort of really kick off. You leave some runners. So I like to kind of be on the short side of this if I can, and especially with some very nice points that you've made about this. Look at the monthly. Yeah, it's a bit of a mess. But you kind of get down there, you're seeing a lot of nice symmetry.
So it's funny about consolidations, depending on the time frame. I hear a lot of people hate them, and honestly, I just see like, okay, we'll grab the next bounce. It's high probability if it's trended for a while. Grab it and see where it goes.
This is exactly your type of chart.
No, it really is.
Being a range trader predominantly. Yeah.
Well, look at crude yesterday. Look at what it did. Same thing.
I can't believe I didn't get in this time, man. I've been getting in here. Yep. This is a weekly chart, by the way. How many times have I been getting in and getting out, getting in, getting out? And then finally, the day I don't get in, it does that.
Yeah, same. I know. My trigger went off. I look back.
Yeah, in stream, I was like, you know what? I really like it here. And, I think I'm going to fire one or something. And I never did. And
it just did a beautiful day yesterday.
Yeah.
It rocketed right.
Yeah.
What 62 to where it is now? Oh, what a mess.
Yeah. NatGas. Is this a tradable idea? So far, it's not looking like it. It's a bit of an out-of-the-box idea because seasonally, this is the worst period for NatGas. You're coming out of the winter. There's no panic to restore inventories and things like that. There's no demand pressure, so you don't have any of that supply and demand pressure. For example, you look at the February and March months, April, downtrend. You look at the February, March, April, downtrend. Right?
Yeah.
Every single year, February, March, April, downtrend. So it's a horrible time. February, March, April of 2022. Now, was this the Ukraine war stuff? Ukraine war, when did that kick off? Anyone able to do a quick search? Maybe AI it?
Yeah, right.
February 24th, 2022. There you go. It could work. I'm already intrigued by the article. Can we think about, is there an idea here? Because I've missed crude. Can I kind of sneak in
a way? My shortcoming.
Huh? Yeah, exactly. Okay, now how do I get in this trade?
I'll move into something else that looks nice.
Yeah. So NatGas, probably just watch it a little bit for now. For me, I think. But yeah, I'll drop it in the chat when I do decide to go. But it looks like we're almost there. It almost looks like the level that we want to kind of get engaged. If you are into this, maybe a small position. This is wild though, NatGas. So yeah, position sort of size accordingly. But yeah, I think this is looking very interesting, considering the little bit of looking back that we just did. All right, I think that covers more than covers a lot of the main talking points. So we'll wrap it up there. Thanks a lot for tuning in, and we'll speak to you guys in the chat. Cheers.